Let's get ready for Monday Mortgage Minute with your hosts, Tom McNamara and Bruce.
All right. Happy Martin Luther King Day and happy Inauguration Day.
Happy Inauguration Day. Absolutely.
It's going to be a great day to be an American, isn't it?
It is. It is. You know what? No matter which team you were for when all this came down, there is one thing I'll say, and it's from a football analogy, talking about coaching and the teams. And if you're having a team that's just having a bad year or a bad couple of years, sometimes just changing out the coach gives everybody hope. It's not necessarily an argument against the coach, just gives everybody hope, man. So we got a new coach.
We got a new coach. And we got a tough one. We got a tough coach.
Keep getting better. So, hey, we got some cool news to talk about, and this is going to kind of set the tone for the year, right?
Yeah. So if you're looking to buy, sell real estate, you're a real estate agent, you're looking to buy, maybe refinance, pay attention to this. We're going to go over some really amazing numbers here.
Yeah, absolutely. So anyway, so national housing market, right? So this obviously, all this data, we're only 3 weeks into the year. So this is mostly like the end of 2024 data, but housing starts. So that's where the permit is complete and the house actually begins construction. They're up 16%. That is
16% up. That's an incredible number.
And that tells me that the builders have seen quite a bit of enthusiasm in the market because they don't start homes until they feel good about it, right?
They absolutely don't, because they've got, they're paying their banks for all this money that they got out on all these inventory homes. So the numbers look like they are the fastest pace since 2006. Now, I remember 2006 very well. That was back when there were bidding wars. That was the end of all of the bad mortgages, though, if you recall, right?
Right.
So we don't do that anymore. Those problems don't exist anymore. So I don't see that as being an issue.
And I don't think this is saying that we're approaching the pace of 2006. It's just the fastest since then. And builders have really learned to tamp down how much they overbuild, right? I think they've gotten a lot smarter. And unfortunately, it's kept the housing, the new housing is still not enough. We're still 5 million units short of meeting demand. So, but hey, good news on the new home front. New builders are building more, and that is going to keep the market going and keep prices somewhat in control. Mortgage applications. This is your side of the world, right?
Absolutely. So we're seeing a big uptick nationally. They're up 33% for new purchase applications. So this doesn't even include your refinances. But even refinances are up right now. Although I'm still waiting. I'm waiting on refinancing for people that want a interest rate reduction or try to eliminate PMI. But for people that need debt consolidation or cash out, it's not a bad time. Just be cautious if you're trying to do a rate reduction. It's going to come. You can get on my VIP wait list, and when that rate hits that target, we'll call you and we'll get you refinanced right there. But activity on purchases is wonderful news. That tells me, Tom, that people are feeling better, even though really nothing's changed, right? Nothing's changed from what it was 6 months, even a year ago. There's not really a lot that's changed.
Not in the housing market.
Feel better.
Yeah,
they feel better.
For sure. So let's look at some economic highlights, right? So the stock market continues to be on a tear.
Yes,
it continues.
Yeah, and that's really good. You should be in the market. Don't sit on cash right now. Make sure your money's in the market, either in the stock market or in real estate. Real estate is going to take a surge. You just don't know when it's going to happen, but you don't want to chase it. You want to get in now.
Absolutely. And then, of
course,
we've got
fourth quarter gains were up, and it's fueled strictly by optimism. How about that?
Yeah. And, look, we always talk about how world events can impact things, right? This Israel Hamas thing, hopefully it holds, but that is some really, really good news for the world, because
Absolutely.
you know, I mean, war and devastation like that doesn't help anybody except for, you know, the makers of weapons, right? So much better that we have a little bit more peace throughout the world. So that's a good start there. And
also
obviously
CPI. Yep.
We had a strong sales in December, you know, which again is just insane that people are driving through this inflation like it doesn't exist, but we all know it exists and we all talk about it all the time.
Absolutely. So yeah, inflation is not really still where we want it to be. We need it to be a little lower for interest rates to drop. Keep in mind that inflation is the arch enemy of the bond market. Now, although we saw some improvements and gains in the bond market last week, it didn't end up on the note that I was hoping it would, although it ended up better. We gained about 80 basis points last week in the bond market. So putting that in perspective, for every $100,000 mortgage that you would get, you just saved about $800 in loan costs.
Wow.
So
wow. Yeah.
Up front. So by the bond market improving by 80 basis points, it improved the cost of your money. Now, could it have improved your interest rate slightly? Maybe a little bit, but not much.
Sure.
Mostly loan.
We're going to cover interest rates here in a minute, but I'm pretty sure that the general consensus on forecasting interest rates is they're going to be basically the same through the whole year.
We are not expecting that we're going to see a big improvement in interest rates anytime soon,
or get worse. They're just going to rattle. They're going to rattle between where they are, and you know, it is what it is.
I think they're going to run between 6.5 and 7.5. It's probably about where they're going to run.
That's probably a really good range to predict.
So the only thing that's going to cause people to react and get in the market is to feel better about their situation.
Yeah, absolutely. So, and there you go, right there, consumer sentiment, right? I mean, that's a big thing. Apparently, University of Michigan thinks it's going to dip a little bit, but overall positive momentum, right? So, you know, I think January dip might be the Christmas overspending hangover. But you know, I mean, as we look into the year, I think, you know, generally speaking, people think things are going to get better, and if they think that, then it likely will.
Well, and I think their prediction of a dip, it would be natural in any circumstances, because what's going to happen is you're going to get all this momentum coming off the inauguration and people wanting that change. And then probably by February or March, you know, the excitement kind of wears off, because there's a lot of things that have to happen in order for that economy to get better. And it doesn't happen with the flip of a switch.
Absolutely not. No,
so I think
no way
that's probably, I think we'll start to see that dip just a little bit, probably in the next month or 2 months.
Yeah. So last thing that we're going to cover here is the Federal Reserve. So there you go. That's the Fed rate. Now, I know, you know, a lot of people think that has something to do with mortgages, and of course it does in a way. But you know, there's the rate, and the chances are that it's going to stay relatively the same at least for a while. 44% chance of a change. Now, interesting, they don't say change up or down, they just say change, right?
Yeah, I don't think we got any changes coming about. I think the government's going to leave things as they are, and let's just see what happens. And that Fed rate has no impact on mortgages whatsoever. None at all. It just does not affect it. We are tied to the bond market, and that is the Fed rate from bank to bank. But when the Fed posts the Fed rate for what we're looking at, it's really the Wall Street Journal Fed rate, which is going to be 3 points higher than that. So that's typically what we see.
Gotcha. Okay. Well, there we have it. Right. So, yeah,
so I feel good about it. I feel great that we're going to have we got a great year coming up. I think that there's a lot of people that feel the same way. don't get caught up in the hysteria. What you want to do is know the facts. Right now, interest rates are steady. Housing prices continue to go up. Builders feel better about the future, so they're going to put more inventory in the ground. That is going to cause sellers a little more competition. So if you're selling a home and inventory, and even though inventory has dropped a little bit from where it was a month or so ago, we really feel like there's still a fair amount of inventory, 4.5 months of inventory. And if builders are going to start producing more spec homes, that's going to put more pressure on it. It's going to give buyers a bigger opportunity because they're going to have more options. That means sellers are still going to have to get right and negotiate, maybe make repairs, maybe pay some closing costs. If you're a seller, look at what a builder does. If a builder's offering rate buy downs and you want to compete, then offer a rate buy down.
Yeah.
The builder, look at the builder's home. Does the builder have paintings and pictures of their family all over the place and clutter? No, it's clean. It's minimalized. They're usually like grays and whites and blue pastels right now. Listen, you want to get the most for your house. You talk to somebody like Tom, and Tom will guide you in the right direction so you can get maximum profit. But you have to listen to the professional. You got to listen to them. You can't go, I know you want that, but I have nowhere to put it. No, we're going to rent a pod and we're going to dump all this stuff in the pod, clean the house out so we get maximum dollars for it. But you have to listen to the professionals, and you've got to make it so that when people see it, they can picture themselves in that home.
That's the key right there. You got to picture yourself in there. Hey, I got one bit of surprise news for you, Bruce. We didn't talk about this, but here it comes. Get ready.
Yeah.
Look at that, man. Bitcoin, 106,000. Look right there. The high, 109,000.
Incredible.
Insane.
So you're sitting on what, 100 Bitcoin or something right now?
I wish I had 100 Bitcoin. I do not. I do not. But
well, you know, if you have Bitcoin, you're doing well.
I do have one. So
well, there you go.
I do.
You got $106,680 sitting in a coin somewhere that you can't even touch.
In a coin. Yeah, well, yeah, that's absolutely right. But, you know, hey, it is what it is. But anyway, I thought I'd show that because in case you didn't know, not only is our federal government talking about creating a Bitcoin reserve and buying Bitcoin, but many states are as well, individual states. That is legitimizing Bitcoin, and it is going to make it a true commodity that is going to be traded higher and higher and higher because there's only 21 million that'll ever be made.
Yeah. Interesting. Till they start making more, like our money.
Nope. Can't make more. Other coins, but can't make more Bitcoin. Brother, it has been a great time talking to you. I am going to go.
Have a great week, and I'll see you at our class on Wednesday.
Tuesday,
6:30.
Oh, you got another class on Wednesday, right? You got a class on Leapfrog.
The Leapfrog, yep.
Yeah, awesome.
So if you want to learn how to invest in real estate the way the pros do, Tom will be there. I'll be there. If you're a realtor, you want to bring your clients. If you want to know how the professionals do it, go to webringyouhome.com and register. We got to go. We're out of time.
Awesome, brother. Have a great day.